afternoon, ladies and gentlemen. I should say good morning to those of you who are joining us from the Central Time Zones, the Mountain Time Zones, or the Pacific Time Zones here in the U.S. and North America. I also want to say good evening to those of you who might be joining us from across the pond there in the UK. And we also have some attendees from Australia as well. Welcome to today's presentation, the Introduction to the PowerOptions Suite of Tools. Today's presentation is just going to be a brief walkthrough of the PowerOptions Suite of Tools and tips on helping you navigate the tools in the site to help you save time with your options research and analysis. And we're going to begin in just a few moments. I want to remind those of you that are currently on your 14-day free trial, if you do subscribe to PowerOptions at the end of your 14-day free trial, you will receive an additional 14 days for free. So you'll have use of PowerOptions for 1 full month before you're technically going to be billed for the service. Also, for those of you who are on the trial or those of you who are subscribers, just remember that you can take advantage of those free coaching sessions at any time. The free coaching sessions, there's no limit to how many you can have. You can have multiple coaching sessions during your trial or as a subscriber. And the coaching session is essentially a 40 to 50-minute phone conversation with either myself or one of the other staff members, and we'll answer any questions that you have, we'll walk you through the tools on the site on a one-on-one basis. It's sort of geared more towards what you're actually going to be doing than a broad overview of the site itself, which we're going to do today. And I want to encourage everyone to take advantage of those as you're going through the tools on the site, or if you just have any basic questions as well. All right, well, let's go ahead and move forward. The first thing we want to discuss today, of course, is what is PowerOptions. And PowerOptions is a patented suite of search and analysis tools that were developed for self-directed options investors. Ernie Zarrenner created the PowerOptions tools about 13 years ago to actually trade his own accounts. When originally PowerOptions started, it only had features and search capabilities for things such as covered calls, naked puts, long calls, and long puts. But then over time it has expanded. We now support over 23 different strategies. What these tools will allow you to do is search across the universe of options in a given strategy to identify only those positions that match your personal risk-reward tolerance. Once you've identified the position, you'll be able to do further research and analysis and compare the risk versus reward of any of the strategies that matched your criteria. We also have a powerful set of portfolio tools which will help you paper trade, track, and manage your positions. Of course, in addition to the powerful set of tools that we have, that essentially cover A to Z of an options trade, we also offer countless educational articles on the different strategies and management techniques, as well as help pages on how to use the tools, archived webinars, and flash tutorials. And as I mentioned, we've been in business for over 13 years, and of course we have many more years of combined trading experience with the staff members here who handle the phone calls, emails, educational articles, coaching sessions, and so forth. Now, my name is Michael Chupka. I will be your presenter for this afternoon. I'm the Director of Education here at PowerOptions. I've had the great pleasure of working with Ernie and the PowerOptions staff for the past 8 years. I handle most of the coaching sessions and a lot of the education on the site as well. I have co-authored 2 books on options investing with Ernie, one on naked puts and one on using protective option strategies, the different forms of married puts and collars that can be used in different markets. Now, I am versed in all strategies on the site. But there are some strategies that I do not trade in my personal account. Things such as iron butterflies, for example, short straddles and short strangles, and of course naked calls. These do not match my personal risk-reward tolerance, so I don't trade those positions in my active account. However, if you have questions on those strategies, I can easily help you with them, answer any questions you have about setting up the search criteria or managing the positions in the portfolio tool as well. All right, well, let's navigate over to the PowerOptions suite of tools, and we'll go ahead and get started with our presentation. This is a trial account view that we're seeing right now. And when you first log on to your trial account, of course, you have the default tabs selected at the top. You start off with the main Home tab where you can access the free coaching session. You can go into the Learning Center where you can access the various articles, education, archived webinars, flash tutorials, for example. You can also access the Power Store. This is where we have our various educational products and books on options investing. You, of course, can view the blog at any time. And the sign-up bonuses, we mentioned some of those at the beginning of the presentation. You can also go into the My Account menu at any time to make any changes to your user ID, password, or if you want to make any adjustments to your mailing address, for example. If you're just getting started with the PowerOptions account, we want to encourage you to follow these 4 steps to help you get more familiar with the site. Where step 1 is you can access the free user guide, or you can request to have one mailed to you. The Flash tutorials will help you get better acquainted with the tools on the site. You can also access the Flash tutorials from that Learning Center menu. We do host a variety of free live webinars during the week on various option strategies and using the PowerOptions tools, so you want to make sure that you come join us for these free presentations. And then, of course, step 4 would be the individual coaching session as well. Now, as you're a subscriber, of course, you can still access most of that information just by going into the Learning Center menu. If you have an active subscription, you wouldn't see the 4 steps listed here for you. Now, in addition to the main Home tab, what we also have here is the locked in place is the My Portfolio tab. This is where you can track and manage your positions or have a paper trading account if you're trying out a new strategy. We're going to go through that a little bit towards the end of our presentation. And then we have various strategy menus selected, or various strategy tabs. This personal account, or this account I should say, start off with married puts, collars, covered call, and naked put. Naked call, for example, bear call credit, iron condor, and the custom spreads. To access a set of tools in a given strategy, I'll just click on the basic strategy tab, and this will take me to that strategy homepage where I can get an overview of the strategy, view the basic profit and loss chart, see some available products for that particular strategy. The second pod shows us our tools, but the tools links are also available right underneath the tab as well, so we can access that quickly without scrolling down. And then in each strategy you'll have a learning center. Here we have a variety of just white papers and articles for the particular strategy, as well as some further information and details on products that are supported by that strategy. Now, as I mentioned, we do support over 23 different strategies. To change the different strategy tabs that you have, or if you wanted to select a strategy that you do not see, we simply have to click the Other Strategies tab on the far right to pick and choose which strategy we would like to view in our tab menu selection. Now, before we go any further, of course, we're just going to ask a question of the general audience, and what we'd like to know is, well, what types of option strategies you're trading or researching right now? Are you mainly looking at covered calls and naked puts? Are you focusing on protective strategies, married puts and collars? Are you using long calls and long puts, speculating on a market movement? Are you focusing mostly on credit and debit spreads, the vertical spreads? This, of course, would include iron condors or even iron butterflies. Or are you currently looking at time spreads, calendar spreads, either diagonal or horizontal calendar calls or calendar puts? So just let us know what types of strategies you're looking at right now, and we'll use that as our main focus for the rest of our presentation. All right, so we have a few votes in. I'm just waiting to see if we get any more votes in on this particular poll. If you're actually not trading an option strategies right now, you're currently not in the market, let me know which positions which strategies you're familiar with or you've heard of that you might be planning on investing with or planning on researching and analyzing. All right, well, I've had the poll open for about a minute. We've got most of our votes in. Let me go ahead and close the poll and share the results. This is pretty interesting. This is the first time this has happened. And I'll share the results. And it looks like we have 100% of our audience today looking at long calls and long puts. Well, very good. Let's go ahead and hide those results. And as you see, from the available tabs we selected, well, I mentioned we had married put, we had collar and covered call, and naked put, and so forth, naked call, bear call, credit, and iron condor. We do not have the long call or long put added to our menu. So let's go ahead and remove the iron condor and the bear call credit. And this will give me 2 available slots where I can add in the long call and the long put. So over on the far right, we'll just add in long call. I'll click on Add to Menu. And we'll also select long put as well. Okay. Now, since these are the main strategies we're going to be focusing on, what I'm also going to do is use the arrows here next to the tabs I'm going to move long call up from tab number 6 to tab number 1. I'm going to move long put up from tab number 7 up to tab number 2. And I'll leave the other strategies in there as well. But if you really are only focusing on 2 strategies, you can remove anything that you don't want to use. If I don't want to use naked calls or don't want to use naked puts or covered calls, we're not selling, I can just remove those. But now I just have 4 strategies here as well. Once I've selected the positions or the strategies I want to have available in our tab menu, I'll simply scroll down to the bottom and we'll click Save. And now we see back up at the top, we just have long call and long put. We left married put and collar there as well. We still have our custom spread menu if we wanted to just create something from scratch. All right, well, let's go ahead and access the long call menu. And to start off, I'll actually click on the tab. But if you notice, if I hover over a tab, I'm hovering over the long put tab, and that activated the tab feature. So I can go right into any of the tools for the long put menu, even though I'm still showing the long call homepage. So you can just do that quickly if you just wanted to access the long put search, for example, or the sample searches without actually activating the tab itself. All right, but we're going to start off with our long call overview menu. And what we're looking at here is, as we saw before with the married put position, the first strategy we clicked on, you have the overview menu. It just gives you a few basic bullet points on the strategy itself, and then you can get deeper information, deeper education by clicking on the Call Buying Strategy Help link at the last bullet point of the long call overview. The long put homepage would look exactly the same. Over on our right, of course, we have our profit and loss chart for a static view of a long call position. The Tools pod shows us the same tools we can access in the sub-menus right underneath the main tab, but it gives us a little description. It's the option chain. If I just wanted to see the long call listings of the different months for a given stock, I could simply go to the option chain. The search tool, this is where we can put in our specific criteria to identify only those long calls that match our specific requirements and what we would look for. We have some sample searches that you can use as a stepping stone to create your own personal search. We'll take a look at those as well. And long option finder, we'll want to focus on this when we get a little bit deeper into looking at long calls and long puts. This is a very unique tool where if you have a stock in mind and you have a projection of where the stock might be trading, the long option finder will show you which option might give you the best theoretical return if the stock reaches your selected price on your selected target date. Of course, we can also link to the portfolio tool from the tools menu in a given strategy. Remember, we also have our own tab there. And then, of course, the backtesting features. During the trial, you'll have access to the historical suite of tools. So you'll be able to run a historical search. Once you create a search, if you want to see how it would have performed over time, you can do a historical search, and you can also do a historical search by symbol. And then, of course, in each strategy, you'll also have the Learning Center. For the long calls and the long puts, there's a discussion here on using the long option finder, which I'm going to spend some time with after we go through some of the search functionality. And then, of course, the Bollinger Bands for long options. It's one of the criteria that you can use, and this article here just discusses how you might use some of the Bollinger Band settings if that's a criteria that you use when screening for long calls or long puts. All right, well, the option chain's pretty simple. We'll just review that, take 2 minutes to review that. So if I had a stock in mind and I just wanted to see what the prices were for the various options, I'm in the long call menu. We would just click on option chain. We'll be prompted to enter in our stock symbol. So for today, let's just go ahead and type in SLV, for example. Let's just go with the silver ETF. Now, if I wanted to jump right into a historical chain, I wanted to see what the prices were a week ago or what the options data was a week ago or 2 weeks ago, I could select that from the chain date value. But we're just going to leave it blank now because we want to look at the current prices. So just click Submit. And this will take you to the basic option chain. We have our variable calls listed here. Of course, we have weekly options available in SLV, so those are shown for us 2 days remaining to expiration. The new weekly series will be released tomorrow morning. So if we looked at the chain for this particular ETF, the silver ETF, or anything that has a weekly option, tomorrow morning we'd see the weekly listings with 1 day left, and then we'd also see the secondary weekly listings for 3/11 which would have 8 days remaining to expiration, and our static March expiration, of course, with 17 days left. Now, for a long call or long put investor, when you first pull up this chain, some of these fields are not going to apply to you. On the PowerOptions chain, we show a variety of columns here that are based on if you enter this as a covered call. So these shaded columns we see here in the center for percentage if assigned, percent if unchanged, percent downside protection, even the percentage naked yield. These more apply if I was selling this as a covered call position right now, or if I was selling it as a naked call. But you can adjust the criteria in any chain, in any form. And if we scroll up to the top, you see that right now we're just looking at the 5-strike call chain. I could change that to look at the all strikes call chain, the 5-strike call input chain, or the all strikes call input chain as well, depending on what we're interested in viewing. The reason why we're only showing the 5-strike call chain is because we linked from the long call strategy into the option chain. And of course, it knows that we're looking at calls, so it only pulled up the call menu for us. However, we can customize any of the views, any of the data columns. We have the information for strike, the bid and the ask, Black-Scholes price, previous option volume, current option volume, open interest, implied volatility, delta, and so forth. But some of these columns for the yield, percent assigned, unchanged, and downside protection wouldn't apply to you if you're trading long calls. So what we're going to do is simply click the See More or Less Columns button above the listed menu here, above our listed criteria or categories. And this will take us to a configuration page where we can pick and choose which data we'd wish to view on the chain. So we could look at things like such as the option previous close, last price, option high, option low, last update time, applied volatility over historical volatility, the implied volatility range, other Greeks, the gamma, the theta, the vega, for example. And we might want to remove the downside protection, unchanged, percent if assigned. Just uncheck those boxes, the naked yield, for example. The percent to double might be something that would apply to you if you're looking at long calls and long puts on the chain. But the percent to double shows you what is the theoretical change needed in the underlying stock price in order to have your option bid price double. You could also view different values for the Black-Scholes and the IV over SIV range, Black-Scholes ratio, 50-day, and SIV. So you can just pick and choose which columns you wish to see. And once you've checked the boxes, you can reorder the columns based on a personal preference that you have for the view that you'd like to see, or simply click Save and Return. And you'll be prompted, of course, to refresh the page. And now we just have some of our columns here which are more attuned just to a long call investor. Of course, some of you might, when you use the Greeks more, you would add those into the columns to view the chain. Now this was from the 5-strike call chain, of course, so it's going to remember my column selections, and every time I go to the option chain from the long call menu or go into 5-strike call chain, it will have these columns selected for me. I won't have to change it every time. All right, now what we really want to talk about today is using the search tool, and the functionality I'm going to go through using the search tool right now is going to be related to long calls, but the processes I go through are going to apply to any strategy. So if you are doing a different strategy, we had some other attendees join us after we started the presentation, didn't get a chance to vote in that initial poll. But the steps that I go through, these are going to be the same processes I use in any strategy. So let's say I want to create a long call search. Well, I can start in one of two ways. I can go directly into the search, and when we click on the search tool, I'm just going from the sub-menu here, this is going to pull up a listing of available call options that either match my a default criteria set or one of my personal saved searches. This here is a search that we did in a previous webinar called Long Call Search. We set various criteria. If this is your first time accessing the search, you might be starting off with one of our default menus such as the initial value set or Bollinger Bands. Let me go back to the basic initial value set. This might open up a few more long calls for us. Okay, so we have 45 total results that match the default criteria for this initial value screen. Now keep in mind, these are not recommendations or suggestions. We're not saying this is the only way you should trade long calls. What you're going to want to do is customize the criteria field so that you're only identifying long calls or long puts that match what you would look for. Now, let's take a step back. I could have also started in the sample searches menu. This is very similar to what we're looking at here in the search view, but when I click on sample searches, we have a few theme searches, either in long call or long put. I'll see some theme searches where I can look for long call reports where the total option volume today is greater than the average total option volume for the stock. Looking for those with increased option volume. There's a default sample search set using the Bollinger Bands. And then, of course, there's one that's just called Calls to Buy. This discusses or screens specifically for stocks that are in an uptrend ranked by volatility. Now, let's just go ahead with the Calls to Buy screen, looking for stocks in an uptrend. Don't know how many we'd have right now the way the market's been. Okay, but we do have a fair amount of results here. It's showing us the top 20 results from the sample search. But just as we saw before, as I scroll down below the listed trades, we still have the same parameter field that we would have had in the search menu. So you can use one of these theme searches as a default screen, as a stepping stone to create your own personal search, or we can go into the search directly and just start from scratch. Now, in any strategy, I always tell the customers of PowerOptions that it's best to start from scratch and to start with what you know. Don't necessarily use all the criteria that are already set, because again, these are not recommendations or suggestions. Let's say that you are interested in long call trading. Well, you're going to have some basic concepts of what you'd look for when buying a long call or selling a covered call, doing a bull put credit spread. There are some things you would look for, basic criteria you know you would look for when you open a search, and that's where you might want to begin. For example, if I'm trading a long call, I'll go into the long call menu. Either I could start with a sample search, or I could just go into the search menu. And then what I'll do is scroll down to the bottom and hit clear these settings. That's going to wipe everything out of the criteria field. Now, what are we going to start with? Well, if I'm buying a call, I know typically I'm not going to be buying a weekly option. I'm probably not even going to be buying a close-in near-month expiration. I want to give the call some time to appreciate for the underlying stock to move in my desired direction. So I might have a preference where when I buy calls, I'm only going at least maybe 3 or 4 months out in time, but I typically don't go more than 8 or 9 months out in time, for example. You might have a different preference, and that's fine. But in any strategy, that's typically the first thing we'd set. Now, I'm sorting the results by volatility. I might change that later, but for right now it's fine. Then I'm going to go into the option expiration time frame. Now, I can select the nearest expiration. I could select March or select April, or I could select June. But we're going to go ahead and leave it at all months because we're going to look for a range of expiration dates that match what we'd normally purchase for a call or a put. So in this case, I'm going to say, well, my minimum preference is I want to be at least 3 months out in time, but I typically don't go more than 6 or 7 months out in time. So in the days to expiration field, I'll put in my values of at least 90 days out in time, but no more than 210. I know your preference might be different, but you just want to put into the screen what you personally use for a time frame on your options. If I'm doing a credit spread, of course, if we were in a credit spread search, I might use all months, but I'd limit the days to expiration to be between 0 and 45. I don't want to go long-term with a credit spread or naked put or a covered call. But when I'm buying, I might want a longer time frame for the underlying security to move in my desired direction. Now, some of you may specifically screen for ranges when you buy calls. Let's say you don't typically, when you buy a call or a put, you won't go more than 2 strikes in the money, and you won't go more than 2 strikes out of the money, usually buying slightly in the money or maybe a little bit out of the money. Well, I can set that with the show in the money and out of the money field. And what I'll do is just limit the restriction by number of strikes from blank to 2. This will only show me, won't allow any of the results to go more than 2 strikes in the money, and I can do the same thing with the out of the money field. Now, if you have a range such as this, where you're usually, maybe 1 or 2 strikes in the money or maybe 1 or 2 strikes at the money, and you occasionally will buy the at the money position, you'd want to leave this field as blank to 2 and blank to 2. If I put in 0, this will overwrite one another. So it would only show, if I put 0 into the show out of the money range, it's only going to show me options that are at least at the money, 1 strike out of the money, or 2 strikes out of the money. It wouldn't show me the in the money options. But if you leave it blank, in the first box, that'll just bracket it. So now I can go up to 2 strikes in the money and up to 2 strikes out of the money. That's not a suggestion or recommendation. It's just how you would use this. If you only use in the money strikes, maybe I'll just go 0 to 2 or 1 to 4. You could even use percentage. If I only wanted to see options, buy options, that were slightly in the money, by using a field of, let's say, a percentage range of at least 2% to 12% or 15%, we could put that in as well. But I'm just going to stay with this bracket around the at-the-money range. Now, for other strategies, this earnings date might be very important. For long calls, unless you're playing an earnings date strategy for the long call or long put trade, you wouldn't necessarily want to use this field. We can choose specifically to look for stocks or to see results where we have an earnings date between now and expiration, looking for a sudden pop on our position. I could also use a time frame. Say I only wanted to see stocks that had an earnings date between now and 2 weeks from now. Even though I'm buying an option that's at least 3 months out in time, I want to see stocks that have an earnings date coming up in the shorter term to look for a sudden pop one direction or the other. And I can select to view earnings dates not between now and expiration. This, of course, would be more frequently used if you were selling premium, credit spreads, debit spreads, naked puts, covered calls. Okay. All right, so the ex-dividend date, probably wouldn't be using this in the long call, but in any other strategy you could select to view an ex-dividend date between now or not between now and expiration. Now we move into the columns. The center section is mostly related to our option information. Now if we had selected the current option volume sample search, we would have seen some default criteria here before we hit clear these settings, looking for a high percentage current option volume, a high option volume today, and a high previous option volume. If we're not focusing on the percent current option volume, then we can just put in our ranges for what we'd want to see for liquidity. For example, if I only want to see options that traded at least 50 contracts today and have an open interest of greater than 100, we just want to plug that in. Of course, I can put in values for previous option volume and the percentages as well, if that's my view. Now, these are just basic criteria. I think these are criteria you'd already have in your mind if you went into a long call or long put search. You know the time frame you typically look for. You usually find yourself going within a certain range in or out of the money. You can also use the delta for that as well. You're going to have basic requirements. I normally don't trade an option unless it sells 20 contracts. Well, that's what you want to put in. Why would you want to see results that didn't have that in there if that's something you commonly use? Also, the option ask price. Let's say basically I don't pay more than $7 or $8 per contract. That's just a preference that I have. Well, I'd want to put that in. So option ask price between blank to 7. Now the ranges you can screen by, of course, the Black-Scholes ratio. This just measures if the option is a way to measure if the option is theoretically overvalued or undervalued. It's comparing the actual price of the option to the Black-Scholes theoretical value. In theory, when I'm buying an option, I would want to look for Black-Scholes ratios of less than 1. And this, again, is defined by the option bid price divided by its theoretical worth. So what I want to see are options whose prices are particularly considered undervalued, where the actual trading price is below the Black-Scholes theoretical worth. Now you can also, what's also commonly used by investors, of course, this implied volatility over HV range, implied volatility over historical. That's the same view. If my option's implied volatility is lower than the historical volatility, that might lead me to believe that the option is undervalued. Okay, so want to get more bang for our buck, that's how we would use those particular filters. Now, there's always a trade-off with this. And I don't want to get into too many specifics, of course, with the different criteria. But the trade-off is, if I'm looking for a stock that's moving up in price, that has potential for a lot of movement, well, most likely the rest of the market is looking for the same thing. So it's almost a double-edged sword, isn't it? The options that have promised recently or have been in the news or have speculation that they're going to be moving up in price aren't likely to be undervalued, unfortunately, because supply and demand, the rest of the market is moving in and buying positions as well. This tool allows you to look for that, of course, but a lot of times you might say, well, I was looking for undervalued options and I couldn't find this one stock that was in the news. The reason why, most of those options are probably overvalued. that doesn't mean it's not a good position to enter. Sometimes you can have good returns if you buy an overvalued option or sell an undervalued option if it still works out and goes in your desired direction. Okay? But these are just some of the filters that you can use. Again, you can also use delta, but I've pretty much restricted my delta by looking for this range in or out of the money, so I'm not going to put in a specific field. And of course, we can screen by implied volatility and the percent implied volatility range. And I also meant, some of the other features you can use is that percent to double we discussed earlier, the time value range that you're paying into the position, and of course the bid-ask spread. If you wanted to only see calls or puts that don't have a bid-ask spread of greater than $1, we'll just put that in as well. So the center section, and this is the same selection process, these are the same selection criteria that you'd be able to use in the long put for the long call. Now, if you're in a different strategy, you'd have some other criteria. For example, if we were in a credit spread, we'd have fields such as percentage return, percent at risk amount. We don't show that on the long call because, well, the percentage return on a long call is unlimited if the stock continues to go up, and the maximum risk is going to be equal to your percentage time value that you paid into the position, or really the option ask price. The total you pay, that's your total at risk for the long call position. All right, now, if you're doing a long call, you might not have a stipulation for the underlying stock price. You've sort of already taken advantage of that with the option ask price. And what do I mean by that? Well, with this restriction I put in for options less than 7, and remember, I'm only looking for options that are slightly in the money or slightly out of the money, I'm probably not going to see results for Apple or for Google, because the options on Apple or Google that are 1 or 2 strikes in the money or 1 or 2 strikes out of the money are going to be around $20, maybe $30 per contract. They're going to be outside of the $7 range. But of course, you could limit the stock price as well. You can screen specifically for a stock change today if you only wanted to look for stocks that were trading up today or stocks that were trading down. And then we start into the fundamental fields. We can screen specifically for earnings per share growth. If I only wanted to see stocks that have grown in earnings by 10% from last year to this year, and put that in. A PE ratio. You might have a specification where you only want to see PEs between 0 to 50 or 0 to 70. You can screen by broker recommendation. Stock volume, for example. Beta, of course. You want to see more movement on the stock or less movement on the stock. The historical volatility value. Market cap, price to book, and so forth. Average stock volume, so if I want to see stocks that trade on average at least 500,000 shares per day, we'll go ahead and put that in as well. Now, we also have a variety of technical indicators that you can use, and we talked about some of those Bollinger Band ranges. If you're interested in using the Bollinger Bands, I'd suggest that after the presentation or sometime when you're on the tools, just go into the long call or long put menu and go into that Bollinger Band article that was shown in the Learning Center. That will give you some information on using the Bollinger Bands for the particular search. And remember, you had the sample search already set up in one of the default searches already established for you that sort of takes into account some of the features that's discussed in that white paper on using the Bollinger Bands for long calls and long puts. You can also screen by RSI, the Relative Strength Index, and the Simple Moving Average. For example, if I only wanted to see underlying securities where the current price and the 20-day moving average is greater than, let's say, the 50-day moving average, well, I just selected stock in SMA 20 to be greater than SMA 50, so that will further limit my results down as well. Now, instead of using the fundamental or technical criteria over on the right-hand side when you're establishing your search, if, for example, you just wanted to see long calls that were in your time frame range and in your strike price range that match this bid-ask spread less than $1, for example, and your option ask price of less than 7 points, but you only wanted to look at stocks, let's say, in the S&P 100 or just the S&P 500 stocks, well, you don't have to put in criteria. What you can simply do from this recommended list field is I could select specifically just to screen against Dow 30, for example, IBD 50 stocks, the NASDAQ 100 stocks, S&P 100, the S&P 5 stars. These are the Standard & Poor's stocks that have a 5-star rating. And there's some other S&P groups in here as well. Now, I can also create our own personal lists. If I click on the Create and Modify List link here, that will allow me to input my own stock list. So if I'm tracking just a list of 30 or 40 stocks to begin with, and I only want to look for long calls or long puts against those positions, we can create our own list and just screen against those as well. You can also remove any of the lists. So if you've created lists, for example, or if you're, I'm sorry, you want to remove things such as the Dow 30, or let's say you wanted to remove indexes, ETFs, and holders, you just want to look at straight securities, well, they can just select that from the Remove Stock List field as well. In addition to that, you can also screen specifically by sector or industry or remove a sector or industry over here on the left. Well, now that I've put in some of my basic criteria, just some basic things I look for the stock and for the option, I'm going to go ahead and click Submit these settings, and the system's now going to rerun the search and find only those positions that match my new selections. Now we have 47 total results, so out of all roughly 150,000 possible call combinations, we've narrowed it down to only 47 which match our criteria. Now we do have various repeats. For example, SVM, here we see about 7 or 8 different positions and about 5 or 6 positions on silver Wheaton SLW. And these particular positions, of course, they all match our criteria. And of course this will happen with some of those single strike options. Remember, the time frame I selected was to be between 90 and 210 days out in time. Well, we've got our June series on Silver Corp and our September series that are 199 days to expiration. The stock's currently at 1408, so we have different single dollar strikes now which match my criteria, the 14, the 15, and the 16 for June, as well as the 14 and the 15 for September. And as we did before in the option chain, we have some basic selection here for the volume. So these ones here on Silver Corp, the whole stock, of course, is showing large stock volume today, or 200%, 231% option volume today compared to the average on the entire stock. NVIDIA is actually pretty low. It's below its average for option volume during the day on the stock itself. We have our columns for the implied volatility, the option ask price, percent of range, and so forth. But again, these are just some of the basic criteria that we selected. As we did before with the option chain, if you wish to see other data in your results table, we'll simply click the See More or Less Columns button up at the top of the screen. And we can pick and choose anything we'd want to see for the stock information on the left or the option information on the right. Again, you can select the different Greeks, gamma, theta, or vega, rho as well. The IV over HV ranges, for example, or the Black-Scholes ratios if you wanted to see those also. And of course your time value bid-ask spread. So you can just pick and choose which data columns you'd want to see to help you analyze positions in a given strategy. All right, so I didn't make any changes there, but let's just reset that view. All right, so now we have our results. And let's just say I was a little bit focused on that percent option volume, that I wanted to see some things that had decent activity today. Well, right away, of course, I might just negate the first 2 positions without doing any further research. They're below 100%. They have low current option volume today, not a lot of activity. So maybe I'm going to just focus on the SVM series. Now, even though there's a lot of different strike prices, there's 5 different positions we can choose. Before we even get to that point, when analyzing a long call or a long put, we got to take a look at the stock chart, the company information. Is this a position we'd want to invest in? So now that I have my results, we'll simply use the More Information button. And again, this is the same approach I'd use in any strategy. And the first thing I'm probably going to look at is I'm going to take a look at the charts. I can look at a 1-year snapshot, or we can link to big charts here. We're going to go ahead and link to big charts. Sorry about that. There we go. And we just want to make sure that the stock is going in a trend that we expect for the strategy. We're looking at a long call, so we want to see positions that we feel comfortable are probably going to be growing in price over the next 30 or the next 60 days. Now, I don't have anything saved here. This is just the basic view, but you can select a variety of different indicators here on big charts, and you can store them as well. So if I click on the indicators here, over on the left, we can select simple moving averages or exponential moving averages. I can look at things such as the Bollinger Bands, moving average envelopes, for example. We can also select things such as MACD or RSI, fast or slow stochastic. So you can customize this any way you want to based on what you use to help, kind of technical indicators or charting indicators you use to help you evaluate if this is a good position. And then, of course, you can always click on Store Chart Settings. That will save a cookie so that any time you're running any search and you link to big charts, it will remember which settings you had originally established. So you'll always have that available. Okay. Well, we're not going to go too in-depth on reading charts here. That's not what this presentation is about. But let's just say, for sake of argument, we know the stock dipped recently, but we like the current trend, and we think this is going to continue for whatever indicators that we used going forward. So we've decided that we like to use the SVM position. Okay, so let's go ahead and close that window. We'll go back to our main search results here. Now, the next step I might want to do is, of course, go to the company information. And I want to take a look at the recent headlines. Is there anything in the recent news that might cause me hesitation for entering into one of these positions? I also probably want to check out the last earnings and events and see when the next earning events is available. And I can also go to the profile. If I'm not, I can sort of by the name guess what this company does, but if I go to the profile, I'll see the specific sector and industry and a more broad description of the company, where they're located, in this case probably where their mines are located as well, so I can get a little bit more information. But you always want to check that. A lot of times a position will match your criteria, and the stock chart might match what you're looking for, an expected strategy, but if you look at the recent headlines, you see there's something on the horizon. Maybe there's a discussion of a recent boardroom scandal, or there's some discussion of potentially meeting to replace the current CEO or CFO or something along those lines. This might cause you hesitation to enter into the position, something unexpected that's coming up, so you might want to avoid that position if you're doing a specific directional trade. All right, so we've done a little bit of research and analysis, took a look at the stock chart, the company information. The next thing you might want to do is go in-depth into the research tool for the stock or the option. Now, this is the research tool in PowerOptions. I'll just click on Stock Research first. This is going to show you all of the basic data that we have for our particular stock. So the fundamental data, the technical data is all listed here for us. Some of the things such as the earnings per share growth we wanted to look at, the price to earnings ratio we screened for. And we do have our next earnings here, 5/9/2011, and the next ex-dividend date. It pays a small dividend. And then we have our volatility measures over here on the right, 20-day, 50-day, 100-day. And of course our simple moving averages as well. And then you also have your put-call volume ratios, put-call open interest ratios as well. The current option volume, for example, that we saw before. And then of course you have some of your broker recommendation values. Not many brokers you see are voting on this particular stock. And then you have your earnings per share and estimates over here on the right. And you can also link to other pages for further analysis. If you scroll down on the stock research menu, see some of the text links here at the bottom, optional stocks and industry, and we can go to company news and profile again, earnings calendar, opinion indicators. These usually link to Zach's pages, bar chart, for example. Just other third-party pages might give you some more detailed information if you like. All right, let's go ahead and close the stock research page, go back to our search menu, and the last thing we want to see, let's say we are looking at the June 14 call here, for example. We're just going to follow with that one. And we can also go into the option research. For those of you that are doing long calls, you might want to take advantage of this page. This is the same field we kind of just saw for the stock, but now it's related to the option. Now I'm going to be honest with you, if you're trading long calls, a lot of this information in the center field you're not going to pay attention to. You're going to pay attention to maybe the percent to double. Remember what we discussed, that would be the theoretical change in the underlying stock price. We need to see our option bid price double. The range in the money, that's of course useful. But these fields here, for all the unchanged, not assigned, assigned, annualized, naked yield, for example, that's all related again to if you enter this as a covered call or entering it as a naked call. Those don't really apply to you. But you may want to focus on the time value of the ask price and the percentage time value. Over on the right here you have your basic probabilities, your implied volatility ranges and ratios. There's the percentage range, and then of course the Black-Scholes values for the stock, for the option as well. your basic data over here on the right, your previous volume, current volume, open interest, for example, and then your Greeks are listed here for you as well as all your prices, the bid, ask, last, high, and low. All these criteria you can select a view in the results table if you wanted to in the search menu, but you can see it here. And the main feature that the option research tool gives you that the excuse me, is not shown on the main results is down here at the bottom. We show the history for this particular option. This was this June 14 call on SVM. And the basic view is showing us the option bid price in relation to the implied volatility. And we use a scroll bar down at the bottom. We can go back and see how these changed over time. The option was released back in November. So as we scroll back, we see that when it was first released back in November, all the way through where we are right now. Now, the base view is implied volatility versus the option bid, but you have selection fields down here at the bottom where you can go through and I can select to view, let's say, the option bid versus the Black-Scholes value, stock price, option volume, open interest, time value, and delta. So you can see a variety of different features against each other here in comparison on this particular historical chart in the the option research page from our search results. All right, let's go ahead and close that down, go back to our search field. So we created a basic search, and we didn't put in a lot of criteria, did we? We just put in some basic things for a long call search that you might use. Again, your time frame might be different. Your range in or out of the money might be different. You might use delta more than the range in or out of the money, for example. Your ask price for the call option might be different and so forth. But when you come in, use a sample search or the main search as sort of a stepping stone to create your own personal search. Put in the criteria that you use. Once you've identified your positions, of course, you want to use the see more or less columns feature to just select which columns appeal to you and that you would use for your research and analysis. And once you identified the positions, use the more information button so to do further research and analysis. Take a look at the chart, the company information, the research tool. We could link to the option chain to see more strikes if we wanted to. Now, what I'm going to do now is one of the last steps we would do when analyzing any strategy, of course, is look at the profit and loss chart. Now, using a long call and a long put, it's pretty simple to see what the profit and loss chart is. For this particular option, we paid $1.80. It's a slightly in the money, just really at the money call out to June expiration, which was 108, 109 days away. So on our profit and loss chart here, okay, our maximum risk is 180, and the blue profit and loss chart here is, of course, if we hold it all the way to June expiration, we need the stock to be trading above 1580. That's our static break even if we held it all the way to June and made no adjustments or didn't close the position ahead of time. And at the same time, of course, if the stock is below 14, we'd have the maximum loss of what we paid into the position, $180 per contract. Now the curved red line right now is showing you the profit and loss at the halfway point. April 26, 2011 is the halfway point between now and June expiration. What we can do on this chart is run some what-if scenarios. Theoretically, what would we expect to see if the stock jumped up maybe to 1480 in the next 7 days? Okay, so today is the 2nd of March. What if we wanted to see what would happen if the stock was trading at 1480 on March 9th? So I'll just put in my expected price and select my date. And okay, well, if the stock moved up, the theoretical value would be $218, so we'd make $38 on our $180 investment. What if the reverse happened? What if we dropped roughly 75 cents and the stock was trading at $13.25 in the next 7 days? Well, the expected theoretical price would be $131, so we'd have roughly a loss of $49 in that scenario. So you can just run some what-if scenarios here on the profit and loss chart as a gauge where might the position be if X happens or Y happens in the next few days, next 2 weeks, next 2 months. Now we scroll up to the top of the screen. When we first linked over from the main search tool, it just assumed 100 shares. If we were doing a strategy with long stock and a covered call, it'd assume 100 shares in one call contract, for example. If we were doing a spread, it would assume one contract. When we linked from long call, it just assumed one contract. But if you wanted to evaluate the monetary risk if we did 5 contracts instead of 1, I'll just scroll up to the top, change the value. Let's click Submit. Of course, now we'll be risking $900 total, or 100% of our investment. Still have an unlimited upside. And then again, we can still run our what-if scenarios. What would happen if the stock was trading at X price or Y price in the next week, 2 weeks, or 3 weeks? Okay? So that's just what the profit and loss chart can allow you to do. Also, if you're a long-call investor who occasionally considers maybe trading a calendar spread right now, you look for the long call, but you think, well, what would happen if I sold a call against this position right now? What kind of premium could I generate for March? Well, you can evaluate that as well. We're buying a 14 call. Up at the top here, let me click on the View Options link. You see I have my March series, my April series. Let's select March. And what would our profit and loss look like? Well, there's not a lot of premium, of course. This is a very close expiration. But for sake of argument, what would happen if we sold 5 contracts of the 16 call against the June 14 call that we purchased? Well, I'll select the 16 call from that menu. And I'll put in my description. I want to make sure I change the action to sell in this case because I'm going to sell some of these calls against it. See how that would change my profile. And I'll keep the contract amount the same. Now I can put in a price based on the difference between the bid and the ask, 15 cents and 20 cents here. What I'm going to do is just click Submit. And if I selected Sell, it's going to grab the natural bid price. If I selected Buy, it's going to have the natural ask price. So I'll just put that in. And then I can start evaluating what would my calendar spread look like in this situation. Now this is a little bit, I don't want to say backwards, but this is a little bit different. When we were originally screening for the long call, what were we doing? We were looking for stocks that we expected to move up in price over a 30 to 60 day period, stocks that matched our criteria that we expected to grow. So in this particular scenario, after I've done that research and analysis, I'm expecting the stock to move up. I probably don't want to necessarily cap my gain by selling the short call against it, but you can use the profit and loss chart to evaluate that. Does it match your expectation of what you expect to see happen in the next 25 or 30 days? Okay, let's go ahead and close that window. Of course, if you're a calendar spread trader, you just would have selected calendar calls from the Option Strategies menu and run your criteria just as we did for the long call, but with your specifics for that strategy. All right, now, one thing at this point that I'll always do, this is specific now to long calls and long puts. I can link to the calculators to evaluate the Black-Scholes price if I wanted to, or look at the long call calculators. But what I'm going to do is, after I've identified the position here, we're considering SVM. When I looked at the profit and loss chart, would have had a better gauge of, okay, well, the stock's at 1407, but I think it's possible that in the next 25 to 30 days, maybe in the next month, this stock might be trading up at around $15 or $15.50 per share. Is this position going to give me the best bang for the buck? Well, I could have used the Black-Scholes calculator to see what this option would be worth if the stock did move up to $15.50 in the next 30 days. We could have seen that on the profit and loss chart that we were just at, but it's not showing us in comparison to other options. This is when I'll use the long option finder. So we'll scroll back up to the top, and now I'm going to click on Long Option Finder for my long call menu. Okay? And we are just evaluating SVM. And my expected price of the stock, I expect it's going to be trading up at around $15.50 in about a month from now. So let's say why do I always do that? 4/2/2011. My investment amount, let's say that we were going to put in now maybe only $800 or $900 as we saw before. Okay? And we could put in less too if we were only planning on investing with $500 or any range that we'd invest into these particular long calls, we'll put that in. All right, so now what we're going to do is click Submit. And in that short time frame, what the system did is it went out, took every available option on SVM, every available call option on SVM, grabbed the strike price, of course, the days to expiration, and the current price for the option, and then ran the Black-Scholes pricing model on every option to see what the price of those options would theoretically be worth if the stock was trading at $15.50 on April 2nd, and then it calculated for us which ones would give us the best return based on our values. Now what's interesting here is the June 14 call that we were evaluating is shown. It's the third one. Remember, the current price was $1.80. If we were investing $900, we could buy 4 contracts. Now why 4 and not 5? Well, we're throwing in some option commissions. It's about $1 per contract or $4 commission. So I couldn't buy 5 contracts because that would be $905. And in this case, the 4 contracts would be a cost of $724. Well, if the stock was trading at $15.50 on April 2nd, the theoretical price of our June 14 call would be $2.43. So we'd have a gain of 63 cents, or an estimated value of $968 for a return of 34%. This is not written in stone, of course. This is theoretical. But what is shown is that the April 12 call with a current price of $2.55, we could buy 3 contracts and roughly invest $768. But if the stock hit our target price on or around our expected date, the theoretical price of the April 12 call would be $351, and this would result in a 37% return. What this tool does for you is, based on your expectation of the stock price and how much money you'd want to invest in your target date, which option would give you the best bang for the buck. I'd still be happy with the June 14 return in this scenario, but this at least shows me might not be the best one. It's also possible, depending on which price I selected, my expected target price, that the June 14 call that we were originally analyzing might not even appeared in the screen. Now, even though I clicked on the long option finder from the long call menu, if I wanted to see a different speculation, well, at the same time, what would happen if SVM dropped? Let's do the reverse. The $13.50 per share on April 2nd. Let's go ahead and click Submit. And we'll still have results now, but notice, of course, it only selected puts, because only the puts would gain in value if the stock fell to $13.50 by April 2nd. Well, this isn't that big of a move. It's only about a 50-cent, 40-cent move. So let's increase that. Let's drop it down to $12.75. If you're expecting a bigger decline, let's say on the stock. Okay, now we have some more put options. So we have the April 15 put priced at $1.85. If SVM dropped to $12.75 on April 2nd, the theoretical value would be worth about $2.30. So we'd have about a 23% return, and that's the highest right now in the available chain. And of course, if the stock dropped to $12.75, if I was expecting a sudden drop, I might have a different speculation of what the volatility might be, how the volatility might change. I'm shown the implied volatility here in this column for all of my options, my put options in this case. But if I wanted to calculate this based on using a different volatility, let's say if I expect the volatility to go up to 0.65, I'll just type that into the implied volatility field and click Submit. And I have my original results here at the top, and then I scroll down below, and now we see the values if that had increased to 0.65 using a volatility of 0.65, and it changed the order, doesn't it? Okay, so if you expected a volatility change, you might want to use that, or if you expected it to decrease, of course, and you wanted to calculate the values of the implied volatility decreased, you could use that as well. All right, so let's say we were close enough. It wasn't the highest. Oh, I'm sorry. I apologize for that, ladies and gentlemen. I just sort of made a mistake. Give me 1/2 second here. Apologize. That was a silly move on my part. I didn't mean to close both windows. I just meant to close the chain that we were looking at. There we go. Okay, so let's go back to our long call menu. And the last step that we would do, of course, let's actually go into the long option finder again. Let's put in our values. Really apologize for that little glitch there. All right, let's put our values back in. Oh, all right, 4, 2. All right. So when we were on the search menu, we of course had that June 14 call selected for us. Now let's say we wanted to stick with it, even though after we ran this, we wanted to stick with our June 14 call. From the search menu now, or from this menu in the long option finder, the last step I always do is add to portfolio. I have a choice to add it as a long call or a naked call. We're of course going to add it as a long call. Now before I add it to the portfolio, you might have linked to your broker and placed the trade. We also offer a broker link where if you're using Options Express or Brokers Express, of course, you can link directly to that menu also. Well, when when I first click on the portfolio, if this is your first time accessing the portfolio, you'll only have this choice, for example, for new portfolio number 1. And you can name the portfolio. On our webinar account here, we have several ones already created. And we have one for long options and calendar spread. So I'm going to insert this particular long call in SVM into that field. When I click Insert, this is going to take me to the entry page for the portfolio. And it's fairly straightforward. I'm going to buy June 14 calls. Let's say I'm going to do 4 contracts, today's transaction date. There's the ask price for my call option. Oh, commission fee, let's just go ahead and put in $4.95. But if this is a paper trade, of course, you just use a commission fee of 0. We're going to go ahead and click Submit. And notice at the top, we're now in the My Portfolio menu. Excuse me. And we're in the Profit and Loss Portfolios. Now we have some positions entered here. They're all long calls right now. We actually don't have any listing for calendar spreads in this menu. All right. Well, here's our new call, the June 14 call for SVM. We can set a variety of different alerts on the underlying security or on the option price as well. We have our total net cost of $720, bought 4 contracts at $180. And the price right now is showing us a loss. The current price is $1.65 and it's showing us a drop of 15 cents. Well, why are we losing money? Well, when we entered the position into the portfolio, we based it off of the initial ask price of $180. We didn't do any bid-ask spread. And what this is showing us in the profit and loss portfolio is the liquidation. If I liquidated the call right now, I'd most likely receive the bid price of $1.65. So we would have a small loss on the position just due to the bid-ask spread. Okay. Now I do have 2 other calls here. The one on Dell, that really has done well for us in the last 80 days. We haven't been monitoring it actively. But the May 13 call was purchased for $1.10 back on January 17th, and that's now trading up at $2.63. Okay. Now in the portfolio, a lot of times what you'll want to do is what you want to do on the long call, it's not necessary, but if you're trading spreads or linked positions, multi-leg positions, you're going to want to check the View Position Analysis link up there at the top of the screen. What that does, it adds extra columns for you, 6 to 8 extra columns over on the right-hand side, where it shows you the total position cost, liquidation value, liquidation gain or loss, and expiration. Now, there's nothing really different here on the long call side, what we're already showing, because it's just a one-leg transaction. But if I had a spread here, I would see the gain or loss on each individual leg. But adding this position analysis, what shows me is the position cost would be the total credit or debit for that spread, the original expected gain or loss, what my liquidation value is right now for both legs, so what would my total gain or loss be if I liquidated the position, and what would my profit be if the stock stayed at the same price it is right now through expiration. Well, with this particular Dell position, we're not obviously going to make any adjustments or consider any adjustments on the long call for SVM because we just opened it. Oddly enough, the position that we've been in, we opened a long call on ALU on 2/16 a couple of weeks ago. 5 contracts of the June 5 call were purchased for 45 cents, and ironically, that's the same price it is right now. So this option hasn't been doing anything for us. But before we just simply decide to liquidate the Dell position as we're tracking it in the portfolio, we might want to see, are there any other adjustments that might be made on this position? And to evaluate that, what we'll do is simply click the little blue button in the portfolio. Notice we're in the portfolio menu now. We're in the profit and loss portfolio. And I'll use the more information button next to this position. Oops, sorry about that. And I want to go to position actions, and this is where I could roll the leg or close the position to take the profit, or you can add dividends, for example, if you're hosting a stock. This is where you make your adjustments as you go to expiration or if you need to assign or exercise. What I want to do is go into the position analysis view. Now what this view is going to do is give me further details than the position analysis columns we added with that checkbox. All right, I have my original position, the current stock price of $15.46, the current option bid, the days remaining to expiration 80, and my current time value left in price. My delta, of course, we're in the money now, so we're at a 0.9 delta. As I scroll down a little bit further, we have some more information and details for the original position value. That was our original cost for the long call. the current liquidation value right now. We've made 140% after 44 days. We might just want to take that off of the table. If we hold it to expiration and the stock stays the same price, that's what the future expiration value is showing us. So we'd lose the time value if we hold it all the way to the expiration date. So we'd only receive 123% at May expiration. Okay, if we held it and the stock still remained at 15.46. But as I scroll down below, there are some listed rollout opportunities. And these are sort of based on customer feedback, and there's other opportunities that might be listed here for a long call but couldn't be calculated. But what this is showing me here is I might consider rolling my call. I currently have the May 13 call at 264. I might want to consider rolling it to a higher strike to take some money off of the position and lock in some profit. Well, why would we do that? Well, we originally bought this for about, I'm sorry, what was the original price there? It was $1.10. Okay, and we could sell to close our current call for 264 and then take some of that profit and then buy a new call. What would that do? Well, we'd take some money off the table, excuse me, but we'd still have an unlimited upside. So you notice here that if I sold to close the May 13 call for 264 and bought the May 14 call, I would pay $1.86, but my new cost into the position, my new net debit, is only 32 cents. And the May 15 call actually shows me a new cost basis of negative 36 cents. What that means is we originally paid $1.10 for these calls. Maybe we still expect Dell to move up in price, but we want to try to lock in some gains. We could sell to close our 13 calls now for that 264. That would give us a $1.54 profit right now. We have a $1.54 profit in hand, but then we're only spending $1.18 to buy the May 15 calls. So our cost basis now, we'd only have 36 cents invested in these May 15 calls. So if the stock continued to move up, I'm sorry, let me rephrase that. We wouldn't have anything really invested in these May 15 calls because remember, we already had a $1.54 profit. So we'd keep 36 cents of our guaranteed profit in our account right now. I know it sounds low, $36 or 36 times the 5 contracts. But we still have the May 15 call now, so the stock continued to move up. Well, it's great to see it numerically. Let's see that graphically. It might be a little bit better to see. So from these rollout opportunities, which you'll see on any strategy, you're tracking in the portfolio as the stock moves up and the stock moves down. I want to go to Simulate Trade. And this is going to show us a side-by-side comparison. Well, over on the right, or on the left, my apologies, we see the current position. We currently have a gain of about 140%. We still have an infinite maximum profit, of course, on the position. But if the stock retraced and it started to fall in price below $13, we could give back a lot of the profit we have right now. This adjustment by selling to close the May 13 call for $265, buying to open the May 15 call for $1.17 means that we're going to have a profit, we're going to have a position that has a guaranteed profit of $380. This max risk of negative $380 means we are guaranteed a profit. This profit and loss chart ends here, and it never dips into the red. Okay, so we still have an unlimited upside profit potential, and we're guaranteed a profit of $380, but still have the opportunity for more between now and May expiration. So this is just one of the adjustments that's shown on this particular long call example. But this is how the portfolio tools can help you. As you're tracking your positions, you can always evaluate your current gain or loss. You'll be able to set different alerts on the underlying stock or on the option itself. If you're doing a spread, you can set different alerts on the spread position in the portfolio. So in addition to having that powerful search tool that you can customize to only find those positions that you want to see and customize the results for you, the portfolio tool is greatly going to help you track and manage and adjust your positions with all the heavy lifting, all the calculations done for you. In any strategy, you'll be able to see these rollout opportunities and be able to simulate these trades after you see the rollout adjustments. All right. Well, we're a little bit past the 1 o'clock hour, so let me navigate back over to our slide presentation here. I think it's pretty self-explanatory here why we feel you should be using Power Options after we just shown. Patented search of over 23 different option strategies. You also have unique tools in some of those specific strategies, the long option finder for long haul and long put investing, as well as those of you that might be looking at married puts occasionally will use the insurance tool, or for collar spreads, the insurance tool. You can compare the various risk and reward with one click or do further research and analysis. Those powerful portfolio tools to help you not only paper trade and track your positions, but also help you with all the calculations for adjusting or rolling out the position as well. In addition, we do offer toll-free customer and email support, access to the historical data. Those of you who have access to it on the trial right now, the historical tools are not included in our base subscription prices, a 20-minute delayed in the real time. We'll talk about that in a moment. And of course, all the various help articles and strategy tips and a variety of webinars that are completely free that we host on a regular basis. Now, the subscription services, our 20-minute delayed service gives you access to all of the tools and Power Options for all 23 strategies, and that's only $59.95 per month, or a discounted rate of $600 for the year. We, of course, also offer a real-time service. So every time you run a search, refresh the page, or evaluate, open your portfolio, for example, you're viewing the data in real time instead of 20-minute delayed. Cost is $79.90 per month, only about $20 more, or the discounted rate of $800 for the year. Now, the historical data, the historical suite of tools, is not included on the 20-minute delayed or the real time. You can access a 3-month subscription to the historical data for $99.95. Or if you're already on the real time, it's cheaper per month to just upgrade to the professional level of service. It's only $20 more for the professional level of service. You don't have to be a registered advisor for the professional service. But it's only $20 more, and the professional service gives you access to everything on the real-time service, plus unlimited access to the historical suite of tools. Right? Well, some of our educational products, we do offer a covered call course. No one here at the beginning of the presentation when we ran that poll said that they're doing covered calls. But the covered call course is a book, DVD, and a workbook written by Ernie and Greg Zerenner. It's about $200, $209 with shipping, but the purchase includes 2 free months of Power Options. Many of you are familiar with radioactive trading. The flagship product of radioactive trading developed by Kurt Frankenberg is the Blueprint. You can join us every Tuesday and Thursday at 12 noon Eastern if you want to get more information regarding radioactive trading and the Blueprint, of course. And remember, in the Power Store, you can also purchase those the Power Options Trading Series or low-cost books, the Naked Put book, Protective Option Strategies, and Iron Condors. These are about $15 or $20, so they're very low-cost books but loaded with information. I believe each book is about 180 to 200 pages long of information on those strategies and using the Power Options tools to implement those techniques. Now, if you're not ready to be self-directed, you might want to check out Power Options Applied. This is one of our sister services. Power Options Applied, they do the work for you. They offer portfolios on iron condors, covered calls, double diagonals, for example, and other strategies as well. They pick the trades and send out emails for their subscribers when they're adjusting the trades and so forth. You can read more about that at PowerOptionsApplied.com. And for those of you interested in radioactive trading, Kurt, of course, offers a phishing subscription where you can follow over his shoulder and watch as he places his trades. And you can read more about that at radioactivetrading.com. And just remember our upcoming free webinars. Every Friday afternoon at 4:30 p.m. Eastern Time, I host an open discussion presentation. The purpose of that presentation, of course, is just you can come with any questions you have about Power Options, options trading in general, the tools on Power Options, techniques of radioactive trading as well. That's every Friday at 4:30 p.m. Eastern. Typically every Wednesday at 12 noon, we host the Introduction to Power Options presentation. And every Tuesday and Thursday at 12 noon, Kurt Frankenberg hosts his Introductions to Radioactive Trading seminars where you can watch those. These are all completely free and they're available at any time. All right, questions, please feel free to contact us at any time. You can send us an email, of course, to support@powerop.com if you had questions about your account or if you had questions about the tools. Remember also, feel free to sign up for one of those free coaching sessions on your trial or as a subscriber. You can sign up for as many coaching sessions as you like. They're completely free, typically a 40 to 50 phone conversation with either myself or with Ernie regarding the tools on Power Options and any option strategies questions you have. And of course, if you just have a quick question, you can reach us toll-free if you live inside the continental U.S. during market hours at 877-992-7971. If you live outside the continental U.S., you can reach us at 302-992-7971. Or if you didn't want to call on your dime, just send us an email with your international phone number, and when I have a moment or two, I'll just give you a call at your phone number so you don't have to pay for it. Of course, there's contact links on the bottom of every Power Options page. Well, ladies and gentlemen, we went a few minutes past here, but I hope you got some useful information on using the Power Options tools. Today we focused on long calls and long puts. Next week we might focus on something different. Who knows? If you wanted to see other presentations, just remember when you go back to, let's navigate back over to Power Options very quickly. Let's see, there we go. And let me go back to the main home menu there. From the main Home tab, if you click on the Learning Center menu, the Learning Center sub-tab, this will take you to the Learning Center menu. And from here we can click directly to Webinars. All right? And this is where the upcoming events are listed, and as well as the variety of archived presentations. So here's our upcoming live webinar schedule. And over on the right we have the archives here listed by category. So if I click on Power Options Tools Archive here, there are a couple Introduction to Power Options presentations recently for bull puts and for covered calls. I did record this presentation. It will probably be available tomorrow, so you'll have an Introduction to Power Options long call focus as well. Long call, long put focus. There's other listings here for the historical suite of tools. Okay, and you can go through some strategy discussion, special stock dividends, weekly options, parity trades, covered call versus naked put, two-part series on vertical spreads, and we also have some other archived categories as well. So you can review those at any time to help you get better acquainted with the Power Options tools or some of the different strategies. All right, let me flash up that one screen again. So if you have any questions, send me an email to support@powerop.com. Call us toll-free during market hours, or you can reach us internationally, of course. We hope to hear from you soon. Please let us know if you have any questions about any aspect of the Power Options tools, options trading in general, or just basic strategy discussion. Ladies and gentlemen, I hope you have a wonderful afternoon. Thank you for joining me today. We hope to see you again for one of our other live free webinar presentations upcoming this week. Take care, everyone. Happy trading. Good night.